Hi, everyone, and welcome to another episode of the Digital Edge podcast. A stablecoin is a cryptocurrency, but unlike Bitcoin, it does not fluctuate. It's pegged one-to-one to a real currency such as the euro or the US dollar. So today, we are going to discuss why this matters far more than most people realize. I'm really honored to have a guest with us today. It's Patrick Starkman. He's the president of Euro, an electronic money institution and one of Europe's leading issuers of euro-denominated stablecoins. Welcome, Patrick. Thank you for being here. Maybe before we start talking about stablecoins, if you just want to introduce yourself and tell us how you have ended in this position.
Thank you, Françoise. Thank you for welcoming me today. I'm not a traditional CEO of a company. In fact, I started being a regulator, working for the French AMF and then the European regulators. Then I began to be worked as an attorney at law, and then I started a career as a manager of a company, an EMI, as you say, European issuer of electronic money and payment. And this is, in short, my journey so far.
And you've been president for Euro for a few months, if I understand, or even more?
Start of 2026. I was previously the CEO for another electronic money institution, which is checkout.com.
Okay, super. So let's dive into the topic. So for someone who hears the word stable coins and immediately thinks crypto, Bitcoin, speculation, how is what you do fundamentally different?
In fact, a stablecoin is exactly the opposite of what Bitcoin or any speculative cryptocurrency. In fact, it's maintained fixed value coin, and it's completely pegged to a currency such as the euro or the US dollar, allowing value to be transformed around the world 24 hours a day. And unlike the traditional banking system, we are in fact transferring euros from European Union to a third country, and this, generally it can take 2 or 3 days, and using stable coin, it can take only a couple of minutes. So this is really a kind of evolution, or maybe even a revolution of the transfer of value cross-border. It's not only transfer of value, but the first use for euro is really a transfer of money, transfer of values cross-frontier.
So let's talk concretely. Give us a number that makes it tangible for non-specialists. How much you already mentioned it's much faster, but how much cheaper or faster is it compared to traditional money transfer, and what businesses are using traditionally?
Using a stable coin in euro or dollar today, the transaction costs can be up to 10 times lower than those traditional international bank transfers. And unlike banks, in fact, which operate a cut-off time after which payments are delayed until the following business day, stable coins can operate 20 hours a day and 7 days a week. So there is a cost, there's a speed, and in terms of transparency, everything is on the blockchain, on the chain, meaning everything is transparent, and everybody can have a look to where is the value transferred on the blockchain. There's other use cases, by the way, than the transfer of value on cross-border basis. We can have, for example, FX conversions. Today, the conversion of dollar euro dollar or dollar euro is very expensive for large companies, but also for SMEs. And using stablecoin, a euro-denominated stablecoin and a USD-denominated stablecoin, side by side, you can then transfer values euro to dollar very quickly, efficiency, and the cost can also be 10 times lower than what you observe today with the traditional banking system. We have also the possibility of collateralizing values using the stablecoin as a collateral for a transaction. Then it's also a way to replace the traditional money using stablecoin for the same reason: speed, cost, and transparency.
So we see that use cases are developing. When talking about sovereignty and geography, many people assume that stablecoins are an American phenomenon, dollar-based, US regulated. So why does a euro-denominated version matter from a geopolitical perspective and not just a commercial one?
Well, indeed, beyond payments, stablecoins in fact raise a genuine issue of economic and financial sovereignty for Europe today. Much of the world's financial infrastructure is denominated by American companies and technologies, meaning that if European business increasingly rely on US dollar stablecoins for international payments, settlements, or treasury management, on every growing shares of European economic activity, it will depend on infrastructure controlled by American players. And in fact, this is an issue not only for sovereignty, but also for the control of the circulation of money. And today, in fact, what we can also observe is that we have everything, most of the value of the stable coins are in dollars, meaning that if there is no European denominated euro, large companies, even the European one, we will be able to use, or will be obliged to use US denominated stablecoin for their transactions, even for cash pooling intra companies. And this will, in fact, also transfer the sovereignty, but also the control over the stablecoin from Europe to the US.
Mm-hmm. So today there is an imbalance between dollar and euro, which is significant. Can you talk about that and how you see it evolving?
Yes, in fact, today in terms of volumes, there is something like 300 billion USD denominated stablecoin, and no more than 1 billion stablecoin denominated in euro circulating. So again, if you really want to use stablecoin, the speed of a stablecoin, the cost of stablecoin, and so on, today there is not enough volumes for large companies, for example, to do that. So they are pushed to use USD stablecoin.
Mm-hmm. Yeah, and you mentioned that stablecoin users have become larger buyers of US government debt than even sometimes entire countries. Can you explain the link and why is that?
Yes, in fact, each euro-denominated stablecoin are linked to 1 euro. Mm-hmm. And in fact, for the regulation in Europe, the MiCA regulation, allow issuers like HO or other issuers of stablecoin to put a part of this euro into bonds, into debt of member states. We have to put a large part into banks for the security and for the liquidity of the stablecoin, but also we are allowed to put a part of the funds into bonds, state debts, and in fact, the importance also of issuing stablecoin, euro-denominated stablecoin, is that when you transform 1 euro into a stablecoin, then this euro is put into European debt of the state, the French debt, or the German debt. So it's also a way to finance the short-time debt of EU member states using stablecoin. There is a double positive effect, one for the company who is using the stablecoin, and one other positive effect for for France, Germany, and for the European debt, generally speaking, for short debt. I mean, the investment is in bonds which are under 90 days, but even this is very important. That's why there is also use of this euro-denominated stablecoin that can be positive, can have a positive impact for the member states in Europe.
So just an additional question, do you feel that governments are favorable to stablecoins for that reason?
At least they have voted the MiCA regulation that allowed companies to use stablecoin and for EMI or banks to issue stablecoin. So at least they have understood the importance of it. Now, are they pushing for the companies to use it? It's not really the case today, but it will. The adoption of a stablecoin should first come from the large companies themselves. After that, no doubt that the politics will continue to support the development of stablecoin. But that's true that today the first topic is the adoption of stablecoin. Then after that, there's still some issues in the current EU legislations, and the issues are particularly the one you have raised, is where can we invest? In fact, the part of the reserves coming from the euro-denominated stablecoin. Today, as I mentioned, it's only for short-term debt. Probably tomorrow, with another rediscussion on the MiCA, we could see an enlargement of the scope of what can be used as a reserve for stablecoin. We'll see.
So you talked about regulation. So, many people believe that cryptocurrencies, including stablecoins, operate in an unregulated, wild west or environment. Is that true in Europe?
No. In contrary, again, stablecoin are monitored. They are supervised by national competent authorities, by regulators all over Europe. They are extremely well supervised. Tomorrow, we hope that the supervision will be done, by the way, at a European level, but the European Securities and Market Authority, by ESMA, to have a complete level playing field all over Europe in terms of supervision of stablecoin. So today, the stablecoin is extremely well supervised. And by the way, we have also tools to monitor where are circulating our stablecoin. And then it's a way also to have a control over it to fight again money laundering, for example.
Okay, so quite regulated in Europe. You mentioned that beyond large corporation, this technology could have a major impact on small and mid-sized businesses. How would that unfold?
Yes. First of all, what we see is that the usual banking system primarily focus on large corporate and clients, and when, for example, for FX and so on, it's today for SMEs. SMEs are generally underserved. For example, concerning foreign exchange conversion, and the cost today can be 2 to 3% if an SMEs want to convert USD into euro. And as I mentioned previously, the use of a stablecoin can really decrease very significantly the cost of the conversion. So this will help also SMEs all over Europe to export also their product, their goods, services outside of Europe, and then using stablecoin for the FX. It could also again help SMEs to pay outside of Europe for service or goods. And this could also be an important decrease of the cost. When you see for the moment, today, we usually say that the international transfer of funds are made in dollars, but in Europe, we still have around 40% of the transfer of funds from Europe to outside of Europe made in euro. So using stablecoin in euro, denominated stablecoin in euro, can really help also to decrease the cost of the usual transfer of money from Europe to outside of Europe. Again, today, more than 2 to 3%. Using stablecoin, it can be 0.2 or 0.3%.
So Patrick, you talked to us about all the benefits of using stablecoins. So if you had to make a prediction, do you think that in 5 years, euro stablecoins will have become a mainstream payment tool used naturally by businesses, but also consumers? What is your prediction?
No, to me, stablecoins should be viewed as an additional payment layer rather than a replacement of the existing forms of money. Cash is not going to disappear, and payment cards will remain widely used. But what we can see is that the traditional bank accounts, traditional card payments, and so on could be connected to stablecoin wallets instead of being connected to traditional bank account, and allowing again consumers and business to benefit from instant payment, programmable payment, borderless payments, and so on, with a cost which will be much lower than what it is today. So it's not the end of the traditional banks or the end of the traditional payment. It's just another layer which will be quicker and more efficient than what it is today.
Thank you so much, Patrick, for being with us today. Any final thoughts on stablecoins, euro-denominated, you want to share with our listeners?
It's just the beginning. We are starting and going into a new world in terms of payments. Let's have another conversation next year, and I will say something new next year. Every weeks and every months, there's something new in payments. So happy to join this talk next year with a new adventures and new news.
Yes, thank you, Patrick. We know that we are living in a very dynamic environment. Things are changing at the speed of light. So thank you for being with us, and for our listeners, talk to you soon for our next episode. Thank you, Patrick.
Thank you, Françoise. Talk to you soon.